Hello, everybody, and welcome to our Facebook Live session. My name is Ida Celli. I'll be your host today. Just a few quick notes. Underneath the video in the comments, you can write us your questions. Please, let's try to stick to one question per person in order to give us the chance to reply to as many questions as possible. And here to reply to our questions is our very own Gerry Vittoratos. Hi, Gerry. How are you?
Not bad, Ida. How's everything?
Good, good. Busy, but
That's
that's
tax
tax
season.
season.
This is what we do, right? This is what we do. We do taxes, So of course it's gonna be busy right now. And I think a lot of people now they're gearing up now to file the returns. I think most people usually file in late March, early April, usually, and then you get this last rush right in the last week of April. We're getting there. We're pretty much there, and we're here to answer any questions anybody might have. So go ahead and just in the chat ask any questions.
I will just correct you. We don't do the taxes. You do your own taxes, but we help you get
Yes,
navigate
we
through the
give you the
software,
tools.
right?
We give you the tools, right? We give the hammer, but you guys have to hammer. Yeah, you guys have to hammer the nail in, right? That's how it works, So,
Some people are saying, are you? Can you put in the if you can hear us or not?
yeah, can somebody write in the chat because I think
Somebody just
we're
said I have no audio. Anybody else? Done considering
let's see.
CRA. Okay. We have a question. Considering
Mm-hmm.
CRA risk of strike, better to file with UFile soon?
Chris. Okay, yeah. Let me show the question actually. Whoop. Now they're coming in. Okay, so everybody has audio, so we're okay. All right. Okay. Considering. Okay. So, Christy, considering CRA strike, better. You know what, Christy? You should file regardless as early as you can. I mean, it's as simple as that. Okay. So, the reason being that the majority of tax filers, they usually have a refund when they're filing a return. So, if you have a refund, why wouldn't you not want to get that money in your hands right now to do something productive with it? Whether it's paying off some debt, or buying your next vacation, or making your next RSP contribution, right? So the best bet is to do it now as soon as possible. Even with the CRA strike, remember that a lot of the systems that the CRA have are automated already. So when you're transmitting the return, is usually their automated system that will first assess the return. So it should be okay, even if there is a strike. We shouldn't see too many big delays, but regardless whether there's a strike or not, file as soon as possible.
Okay, just circling back to Karen, have you been able to get the audio? Check your volume, please. And
Okay.
by the way, anybody who misses the live session, this is recorded and will be available on Facebook as well as on our YouTube page. So let's go to Pat.
Oh, Pat. Okay, hold on. I think there was a question from Anna actually just before, wasn't there?
Sorry, is Anna
Anna
just
Howell.
before? Okay,
Yeah.
let's go. Okay, you see, I
All
don't
right.
see Hannah. Okay, Anna, I have carried forward donations for 3 years, which I claimed in 2021, not thinking I could donate in 2022. Not thinking I would donate in 2022. It's a $25 donation and not really sure if I will donate next year. Should I claim it in 2022 or carry it forward just in case I make future donations?
Okay, so you had carried forward donations for 3 years, which you claimed 2021. So they're all gone basically. So you have nothing left there. And I would donate, not thinking I would donate 2022. It's a $25 donation. Not really sure if I will donate next year. Should I claim or carry forward just in case I make. You know what, Anna? It depends on your tax situation. Honestly, your $25 is deductible in 2022 or in the following 5 years, right? So you could use them up anytime you would like. You really check your return to see if you need the donation. If you could reduce your tax now, you might as well do it now. You might as well claim it now. If you feel your income is going to be much higher in the future year, you can still claim it. You can still declare it, but limit the amount of the donation that you want to claim. You have that right to do so. You don't have to claim the donation in the year that you made it. At that point, simply carry it forward. It really all depends on your tax situation.
And just before I go to Pat, she has the second question. She claims she did not claim tuitions last year because spouse forgot to give the T2202 form.
Okay.
I know I would have to amend 2021 taxes and carry forward. The
Yes.
form has his last name when he was in elementary and high school. He changed his last name when he was an adult. Would this cause a problem with the government, or should I forget about claiming it? It's for $500.
But wait a minute, the tuition, I'm hearing elementary or high school. I'm hearing. I'm not hearing post secondary.
No, the
Yeah.
form has his last name. Ah, okay, correct.
Yeah, I did not claim because spouse forgot to give me the T2202 form. I know I would have to amend, so I just posted the question now. The form has his last name when he was in elementary and high. Oh, okay, I get. Okay, so it's the last name. Okay, sorry. He changed his last name when he was an adult. Would this cause any problem? Okay, Anna, as far as the name, it will not cause any problem. And you're absolutely right. You would have to amend your 2021 return to declare it and carry it forward to the future year, which, by the way, you can easily do through my account to the My Account portal of the CRA. That's the quickest way of doing it. Just sign up, create an account for your son. It's child's play to do so. Sign up and then simply declare the T2202 there, and then carry it forward to a future year. The name should not cause any problem. The name should not. The government should assign it to the government's going to assign it to the SIN number instead of the name, so you should be fine.
Okay, thank you, Karen. Anna, sorry. Next question. Okay, we're gonna go to Pat.
Yeah.
You're welcome, Pat. It's a pleasure to do these. Okay, he has two questions. One,
Mm,
my son is going to university in Australia. Can I claim
yes.
his tuition, or is that only if he is attending university in Canada? Start
Okay,
with the first one.
so Pat, the answer is yes, you can, but your son would have to give the university in Australia a specific form called the TL11. Okay, and that form has to be completed by the university in Australia in order for your son to be able to claim the tuition. Okay, so the university doesn't have to be Canadian. There's no rule that says that the university has to be Canadian, but you do need to complete that form. That university has to complete that form. A lot of times universities don't, of course, they don't know these laws, they don't know what they are, but your son can simply provide that form to the university. It's a very simple form for them to complete. It's just going to ask how many months they were part-time and full-time and what was tuition that they paid. And then once the university completes that, your son can use that form, which is the TL11, in order to claim their tuition fees.
Okay, his next question is, my elderly parents qualified for the disability tax credit last year due to
Yes.
their health issues. I am their POA and had applied for the DTC after I have filed their 2021 tax return, which were subsequently reassessed. My
Yes.
question is, when I go to apply for it on their 2022 return
Hmm.
under medical expenses, disability deduction, infirmity, and disability, it
Yeah.
asks, does this infirmity provide entitlement to the Canada caregiver amount? I am not sure what that means or if I should check yes or no. Any advice?
Okay, so Pat, for that one, ordinarily, yes, you would be entitled to it because you have the power of attorney in this case, and you're taking care of your parents. And now, when it comes to the caregiver amount, you no longer need to reside with your elderly parents anymore. Back in the day, you did have to reside with with the elderly parents, but you don't have to when it comes to the caregiver amount. Now, to claim the disability tax credit from them if they don't need it, then you do ordinarily have to live with them in that case. But the answer would be yes. And then the program will determine whether you are eligible for it based on certain factors, being, first of all, are they infirm, which they are because they're entitled to the disability tax credit? And number two, is their income below the threshold to claim the caregiver amount? But ordinarily, you would be eligible for the caregiver amount. It's the disability tax credit transfer you'd have to check because they would have to be living with you.
Okay, next question is from Karen. Oh, by the way, Pat, great experience for your son.
Yes.
Um,
Oh, yeah. That's
okay,
that's
Karen.
great. Yeah. Yeah. That's great. Yeah.
Karen, can I claim US taxes paid on non-registered investments? If so, how do I do it?
Yes. So first of all, you can. Okay. So any investment income that you gained outside of Canada and you pay tax on it, you can claim it under what's called the foreign tax credit. And the purpose of the foreign tax credit is to avoid double taxation, because of course, as residents of Canada, we're all subject to tax on our worldwide income. So regardless of where we gain the income, it has to be declared and taxed in Canada. Now, of course, if you pay tax in the foreign country as well, well, now you're double taxed, right? You're paying the tax twice on this income. What the foreign tax credit will do is give you a credit for the fact that you paid that tax in the foreign country. So Ida, I'm going to hide you for 2 seconds,
Sure.
so we can show it in the software for Karen. So here we go. I will now share my screen. All right. So and show it in the stream. And let's see, do I have this right? No, it's right here. Okay, so right now I'm in UFile as we speak. Okay, so what you're going to do is in the interview setup, you have to go to the interview setup section right here. Okay, you scroll down into investment income and expenses on the page to the right, and you will tick the box next to foreign income or foreign property. Okay, so that's the box you must tick. You tick that box, foreign income or foreign property, click next at the bottom of the page. You don't see my mouse right now saying that, but there's a next button at the bottom right of my screen. Once you click next, you go now on your left hand navigator. You will notice a new section called foreign income and property. Okay, so it's all there. So it's right there. It's been added. So once you click on foreign income and property on the page to the right, you will see options for either foreign dividend income or foreign interest income. I don't know what type of income you have in this case, but you have to choose one of the two. Let's say it's dividends. More often than not, it would be dividends, and especially considering how low the interest rates were for all these years. So I would click on foreign income from dividends. So you would choose the country. In this case, where you receive the income, it's very important to choose the country because the foreign tax credit is computed on a country by country basis. Okay. So you would choose the country in this case, and then you would enter the exchange rate, whatever that is, okay, for that country, and then you enter the dividends received and the foreign taxes paid. Okay, whatever you paid for that income, and then from there, the program will compute the foreign tax credit automatically. And it just, it's actually quite coincidental that we got this question today because we literally just posted a video on our YouTube page that explains exactly what I just showed now. Okay, where we show you how to enter investment income in UFile. So you could also go to our YouTube page as well, which we literally posted it today. I think it was like a few minutes ago, actually. So it's quite ironic and quite timely actually that we posted this video. All right, so let's hide the screen here. Let's bring Ida back. And there she is. All right, so let's
Okay,
continue.
let's continue. We'll go. Sorry, the way they're not quite the same order, so I will follow here. Next question is from
Mhm.
Lax. How do you ensure you have received all your tax slips and you can file the returns?
Okay, so Lax, there's really two ways. Okay, and actually, no, there's really one way that will allow you to do it in two ways. The one way is to sign up to my account with the CRA. Very simply put, okay, sign up to the My Account portal with the CRA, which is the online portal of your file. Okay, once you sign up, and it's really child's play to do. You could use your online bank credentials to log into my account. Okay, the government has what's called the partner sign in. Okay, and then once you're in there, once you're using the partner sign in, at that point. At that point, you have an option within the My Account portal of the CRA to go check your tax slips. Okay, so click on that and view all the tax slips that you have. Now, on top of the fact that through the My Account portal, you could view all the slips that the CRA has on your file. On top of it, once you activate your My Account portal, you can even download them and import them directly into your file. Okay, but you need again a My Account portal. So that's the best way to do it in this case. Okay, to make sure that all of your slips are there.
Okay, next question from Dana. I have several T5 slips. Does UFile automatically allocate to the spouse?
I have several T5 slips. Well, it depends. Is it a joint account? That's the question. If it's a joint account, well, if it's joint, you must indicate it in the software whether there's a joint account or not. But there's no direct transfer unless you're doing a dividend income transfer. But the only time you can do that is if you are increasing your spousal amount claim or your spousal amount credit by doing the transfer from one spouse to the other. But this is not an automatic thing. The dividend transfer is automatic again if you meet the criteria. But if the account is not a joint account, then there is no split in this case. So you would have to you would have to indicate to the software that you are splitting with a spouse in this case through the specific section in the T5.
Okay, next question is from Atiqual.
Hmm.
Okay, my friend My friend's son who was 18 years old died last year. Sorry for their loss.
Yeah, condolences.
I helped the family doing their taxes. Son
Hmm.
has no asset or any cash in the bank when he died, but
Hmm.
he has T4. Now I'm
Yeah,
filing the final return and it asking for the 104 brackets 13.4 subsection
yeah.
was made or not. His father didn't create any estate or something as the son had nothing. What should I do? Also, he's deceased, needs any additional return.
Okay, the answer is you don't have that. 104.13.4 is really a specific subsection. It's an election in this case, whether you would have. Don't choose it basically, or choose no if that's the option that it gives you, essentially for 104.13.4.
His next question is my friend married last year and spouse was a non-resident throughout the year,
Mhm.
but UFile automatically claims the workers benefit amount. How can I remove it?
You can't. It's an automatic calculation, but your friend would be eligible because they would not be deemed as having an eligible spouse uh, for the um, for the workers' benefit because of the fact that the spouse is non-resident, right? So in this case, you would be entitled to claim it if as long as there's working income and they are below the income thresholds for the what basically is the what was it called again? The workers' benefit. You know, the Canada workers' benefit.
Okay, and his third question is what are the additional benefits my friend can claim in Quebec on the Quebec return? He's a tenant and self-employed.
As a tenant, the only thing, well, if he's self-employed, it depends if he's got a home office. Okay, then in that case, you could claim home office expenses. But I'm sure you've already done that in this case. The other thing that they can claim is a solidarity tax credit as long as they're below the certain income threshold. Okay, so as long as they're below the income thresholds, they can claim the solidarity. They should have received what's called a Releve 31 from their owner. Okay, from the owner of the building, and they could use the identification number of the Releve 31 to apply for the solidarity tax credit. So that's something that they can do in this case.
Okay, next question from Christy. Any deductions people often forget? That's a good one.
That's a good one, and we're about to make a video on it, actually, which is moving expenses, which we actually wrote a blog article about it. That's one that people always forget. The reason being that, for example, if let's say you moved for a job, for example, you moved and you moved to be at least 40 kilometers closer to your either new job or your new work location, you could actually deduct your moving expenses that you incurred for the move, including, for example, commissions that you paid to the sales agent, including fuel costs, including meals costs, et cetera, et cetera. And you might say to yourself, well, I'm not moving from one province to the other, but it's not necessary to move from one province to the other. If you're moving 40 kilometers closer to your new work location, then that is enough. And quite frankly, considering the distances that we have here in Canada, within a municipality, you could reach that number quite easily. I remember my commute was 15 kilometers when we used to have an office. So 40 kilometers is not a big stretch, okay, to move to a new place, to your new work location. So that's one that's often ignored, and that can be quite beneficial because you could literally deduct all of your expenses. So you could deduct the moving trucks, you could deduct the transportation fees. You can deduct your meals expenses, your fuel costs. You can deduct your commission that you paid for the sale of your home, et cetera, et cetera. There's a lot of these things that you can claim. So that's one that's often missed. I think we missed. Oh, okay, no, yeah, all
No,
right, yeah. Go
Newsrat.
ahead.
Newsrat is the next person.
Okay, perfect.
Okay, how does pension plan impact a tax return filing?
How does a pension plan impact tax return filing? Well, it depends, Nusrat. It depends if you have a spouse. Then that means you could split that pension with your spouse. If your spouse is in a lower tax bracket, for example, that's one example of what you can do when it comes to pension income. You could also claim the pension income amount, which is a non-refundable tax credit of $2,000 for the pension income. But it's a case-by-case basis. It really depends on the situation of each file. But I would say these are two things right off the top of my head that could impact the return.
Okay, Newsrat. Okay, Sandra. How do I incorporate T5008 in my tax return? in my
Okay,
taxes.
you could do that through the slips. So if you go to the capital gain section, there should be a T5008 section, or you go into the capital gain section. To me, that's your best bet. To be honest with you, is to go into the capital gain section of UFile and then enter the information of the slip directly there because it is a capital gains transaction. Ordinarily, it's not. It's very rarely interest income. It is usually a capital gains transaction.
Okay, next is Fola. He
Hmm.
has three questions.
Hmm.
Um, if I use employment expenses for an incorporated business, can I also use the same expenses for my sole proprietorship business? Would it be classified as double dipping?
Yes, you can't use it for both. No, you would have to. I mean, the expenses. To me, what you would do is you would take an allocation on your time. How much time do you spend in a week? What's the percentage of your work week that you spend on your business, and what's the percentage that you're spending on the employment income? And I would do a proration of those expenses based on the time. Oh, we lost Ida. So I'm going to continue on with the questions. If a newly married couple lives in different locations in the tax year in Ontario, would it be better to file their taxes separately or together? How does the CRA treat such benefit and tax? Okay, so in this case, it all depends on where the permanent home is. Fola. Okay, so Ida is back. Here we go. We'll bring her back. So it all depends, Fola, where in this case the permanent home is, because even if that person has left the home to go for a work contract, for example, okay, it doesn't mean in this case that they're no longer residents of that province. To the government, what they want to know is where are your main residential ties, where are your more significant residential ties. So if the spouse and the permanent home is still in Ontario but they've moved to another province, it doesn't matter at that point. They're still considered residents of Ontario for the purposes of tax and for the tax return, and at that point they would file an Ontario return.
And he has a third question. I have a depreciation car balance for a self-employment that was carried forward for me by UFile. I have since
Mm.
stopped that self-employment and started a new one. Can I transfer that depreciation balance to another self-employment that involves me using my car? Do I limit the depreciation on the old self-employment income and resume it on the new position, or how does it work?
Okay, well, Fulla, in that case, first of all, you would have to dispose of the vehicle in the old business, because from what I understand here is that the one business has basically ceased its operations, and now you've got a new business in this case that's running operations. So first step is you have to close that business. So you have to indicate that it's the final year of that business, and then you must do a deemed disposition of the vehicle at the fair market value of the vehicle as of the moment when the business closes. Once you've done that, you take the disposition amount that you indicated in the old business for that vehicle, and that becomes your addition or acquisition for that vehicle in the new business. That's how you would have to handle it.
Next question is from Camilla. Is it worth claiming medical expenses? How much money do I need to make a difference, for it to make a difference?
If memory serves me, UFA will tell you how much you need in order to claim medical expenses. To me, it's always worth it. Why not? Why would you not want to claim it? I mean, at that point, now there are the calculation of medical expenses. The way it works is you take all of your eligible medical expenses, subtract it by 3% of your net income, and whatever's left over, you're claiming 15%. Okay, as a tax credit that reduces your tax payable, both on the federal side and on the provincial side. In the provincial side, it's not 15%. It'll be a different percentage depending on your province. Okay. So the key here is that absolutely you should claim them and try to claim as much as you can. And I would say one of the most ignored amounts on the tax return is people who forget, who have misplaced their medical receipts that are eligible, and then they're missing out on credits that they can claim. So that's the key there. Okay, that's the key there.
Okay, next one is from Francine.
Mm-hmm.
I have a Relevate 10 for $5,000 and an overpayment of 654 last year.
Mm.
Maximum allowed is 2,887. If I write in the Relevate 10 page less than the 5,000, will it go to next year to avoid the 1% monthly penalty?
Okay, so the overpayment is on your RSP, not on the Relevate 10. I mean, the Relevate 10 is an RSP contribution, but you've overpaid. Um, well, one way or another, you've made the contribution. There's no, you can't simply hide it from the government. Essentially, you've already done it, so you have to claim the full 5,000, and at that point, you would be subject because even if you're not deducting it, it doesn't matter. The overpayment is based on your contributions, regardless of whether you've deducted them or not. Okay, so you would still be subject to the 1% in theory, but remember the government gives you a $2,000 cushion. Okay, when it comes to the overpayment, but you still have to declare the full 5,000. You can't simply limit that amount. You can't limit it. You have to declare it. The program will limit it based on your room, and then if you are above and beyond for the overpayment, you will be subject to the overpayment in that case.
Okay, next question from Lax. How do you carry back tax losses?
Okay, that's a very good question, Lex. So let me just go ahead and show that here. So just give me 1 second. So I'm just gonna hide you for 2 seconds. And here we go. And there we go. All right. So now I'm in this case the software again. So again, we go to interview setup. Okay, so let's go back to the interview setup section. And from here, what you will notice here, we go into the section called carry forward amounts and prior year information towards the bottom. Again, it's the interview setup section on the left hand menu, a left hand navigator. Okay, and you'll see an option here in the carry forward amounts and prior year information that says losses of prior years carrybacks. Okay, so tick on that, click next. Then you will see now a new section that will appear in your left hand navigator called losses of prior years and carrybacks. Click on that option. And from there, you will choose, in this case, net capital losses of other, no, sorry, it'll be T1A request for a loss carryback. In this case, so T1A request for a loss carryback. Click on the plus sign next to that. Okay, and once you do that, you go to the section for net capital loss for carryback, which is right here, and enter the amount that you want to carry back to the and assign it to the appropriate year. Remember that you carry up to 3 years back a current year loss. Okay, that's what you're allowed to do. All right, so let's stop sharing there. Let's bring Ida back. All
So the
right.
next
Oops.
question, whoops.
Oops. There we go. Okay.
The next question is from Shabir. How and where can I add chargeback the revision pay back of the commissions earned?
How can I add a chargeback? The reversion payback of a commission earned. Okay, so then that would be um yeah, that would be a reimbursement in this case. Let me just check where I would go for that. Just give me a second here. To me would be in other deductions. That's what I would put it. So let me show that to Shabir 1 second. Um, let me go to the window. Here we go. All right, so I'm going to show this in the stream. Sorry, Ida, I'm going to hide you here. And okay, so now I'm right here. So it would be other deductions and credits. Would be right. It would be right in that section, and then you would say federal line 232 other deductions. So you would include it in there. Okay, that's what you would include in this case that you repaid. In this case, some of the commissions that you earned over during the year, essentially. All right, so let's go back to item, and there we go.
Okay, the next question is from Sylvia.
Hmm.
Okay, sale of a house should be recorded in both 50-50. Should the sale of a house be recorded in both 50-50 ownership? I only recorded it in one person, and a warning showed up in the spouses saying that I answered yes to selling a principal residence, but did not enter the information on this position in the capital gains page.
Yes, you would have to enter it in both. Yeah, I don't think the program does that offhand. Let me just check 1 second. I'm just going to do it here in capital gains. Just going to have the capital gains here. But to me, yeah, if it's shared between the two spouses, I don't believe the program uh, will indicate that amount automatically in the spouse's file. That's my understanding. So to me, yeah, you would have to enter it in both files. Yes.
Okay. Lax, how do I claim capital losses to prior years and offset the capital gain? Did you answer that with your previous?
Yes, yes, I did. Yeah, yeah,
Okay.
yeah,
Andrew Walker,
yeah.
we had foreign rental income in 2022. Do we need to complete the rental income section T776 as well as the foreign rental income on the T1135?
Yes, you would have to put both. Yeah, you have to produce a T776, even though it's a property that's outside of Canada. If you have, if you paid any foreign taxes, which is likely that you did, you can claim the foreign tax credit for this income, and at that point, you would enter it in foreign rental income number one, and you would be declaring it on the T1135 because it's likely that the property is worth more than $100,000 in cost during the year. So you would have to do three sections basically. One would be T776. The second section would be the foreign rental income, as you mentioned over there. And also you would have to enter in the foreign income verification on the T1135 as well. Yeah, absolutely.
Okay. Next question is from Arda.
Hmm.
I haven't done my income taxes return for the last 5 years. I am on permanent disability, and my disability tax credit has been signed off by my
Hmm.
doctor. So, can I get that amount if I do my tax returns?
Yes, yeah, you're allowed. You can go 10 years back, so there's no problem there, Arda. So when you file your return, you're going to make the claim, but remember that when you're filing it, I would recommend strongly if now the question is if your doctor has signed. Remember that the disability that the form that your doctor signed has to be submitted to the CRA as well for approval. So the CRA has to approve it before they claim. Now, if they haven't approved it yet, then what I would do is I would paper file those returns with a certificate in tow, okay, and file it to the CRA. That way they can make the assessment in this case, and you can claim the foreign tax credit. Foreign tax credit. Sorry, I'm stuck on foreign income. You can claim the disability tax credit for all those years as well. But the answer is yes, you are allowed.
Okay, Ma Adelpha,
Hmm.
you file for Windows include 4 extra for marginal income, modest income. Correct. How much is the
Yeah.
modest income? It's for the
Ida?
UFile Windows. It's 25,000 and less.
Yeah, gross
Okay.
income, right? That's total
Yes.
income. That's total income, not net income, right? So it would be in your
Exactly.
total income. So if you have like a big RSP deduction, that won't count, because we don't base it on net income, we base it on total income.
All right. Next one is sorry, I'm gonna mispronounce this.
Hmm.
Bijawa. Yeah, sorry. I really apologize for that. I'm very bad with names. Okay, first question. My wife and I purchased a qualified home in 2022 under the first time home buyers.
Yeah.
We also withdrew amounts from our each RSPs for that. My question is, does that amount go only to the home buyers amount section, or do we also need to input under home buyers plan while filing a
Mm.
2022 to fill
Yeah.
to file under HP
Mhm.
HBP? However, we do not have a HBP set up yet in CRA.
Okay, well, the first thing, Bajaya, is that you would have to file under the HO home buyers plan as soon as possible because right now what you have is a taxable withdrawal. That's what you have right now. So you have to make the application for the home buyers plan. You do have a delay. I believe the government gives you 90 days to file what's called to file even after you bought the property. Okay, so I would recommend strongly to do that first. Once you've done that, that you don't have to indicate it under the home buyers plan section because you don't have to repay your home buyer's plan until the second year after the withdrawal, and then you have 15 years to repay after that. Okay, you do an installment for 15 for the 15 following years, but you must, and I can't stress this enough, you must apply for the home buyers plan because if you don't right now, as we speak, you have a taxable withdrawal, okay, of your RSP. So you have to complete the specific form. I don't remember what it is off the top of my head, but go to your financial institution. They know what to do and fill in that form. And you have, like I said, you have a delay of 90 days. So you better do it now as quickly as possible.
And her second question is, does the interest paid in the mortgage, is it tax free?
Yes, because you're paying. It's a debt. You're paying that amount in this case. So it's not taxable. You're not collecting that income. In this case, you're actually paying it. It's a debt in this case. So at that point, there's nothing taxable there for you.
Okay, next question is from Tino. I'm in Canada for 3 years with a temporary working visa. I rent an apartment abroad and was wondering if I should take amortization. If yes, on what value?
Okay, so I'm in Canada for 3 years. I rent an apartment abroad. I was wondering if I should take amortization, and if yes, on what value. Tino, it depends. Because remember, yeah, I mean, first of all, you would be allowed to take depreciation because it is a valid expense of the property that you're renting, because you're also declaring the rental income on your return. That's the key, though. Is that you have to be declaring that rental income on your Canadian tax return. Okay, now if you're declaring that income, you are entitled to CCA, what we call CCA, or capital cost allowance, which is depreciation expense. The question would be now is, how long do you want to keep that property? Because remember that real estate properties tend to go up in value as the years go by, and then when you sell the property at a profit, you might get hit by what we call a recapture, meaning that if you're selling it for more than what you paid for it, then the depreciation that you took, you'll have to include it over the years. You'll have to include it as income in the year of the sale, and that could be quite penalizing because you've been deducting that expense yearly, but all those expenses you would have to accumulate them and then declare them as income in the year of the sale, and it's all combined. So you have to weigh the pros and cons to see whether it's worthwhile to do so. So for example, if you're planning on selling the property in the not too distant future, I would say don't take CCA, because you're going to get penalized later on when you're going to have to account for the recapture. But if you're not planning on selling that property for 10, 15, 20 years, then CCA makes more sense, because you're collecting some money now and you won't get penalized until 15, 20 years down the line. So it all depends essentially on what you're planning to do with the property.
Next question is from Larry.
Oh.
I seem to have two claims for CCA on my vehicle. First generated by business expense, and the other seemed to appear on its own.
No, you might have two vehicles there by accident, Larry. You might have two CCA classes there. So just check your return again and see. Check the file to see whether maybe you accidentally have two vehicles in there, and that's why it's claiming the vehicle expense twice.
And if you do need some help, please reach out to our support team, UFile, help@ufile.ca, and follow the instructions from the automated email. They may need to see the return just in case you do have a double entry somewhere. All right, if you can't find it.
Mhm.
Next question is from Tasso. I
Mhm.
hold the rights for pre-construction condos still not complete since 2017. Does the new
Wow.
flipping rules apply to me if I want to sell it on assignment?
Yeah, that's a very good question. Wow. Okay, since 2017, Jesus. I'm so sorry, Tasso, for that. I'm sure it's been a nightmare for you, unfortunately. Um, yeah, it's a good question, because my instinct would be no. My instinct would be no, because yeah, that's the thing, because you won't take possession of the property, and then you're gonna want to sell it right away. Um, yeah, and it wouldn't fall directly into one of the exceptions that from what I've read in this case. Um, you know what? Again, my instinct would be no, because quite frankly, this is an exceptional case that you have. I mean, to be waiting that many years for a property that you were intending to live in, to me, you should be okay. But the instinct of the CRA will be to charge you a business income in that case, to charge you, to essentially trigger that residential property flipping rule, which starts in 2023. So, for those of you who don't know what Tasso is talking about, essentially what it is that if you buy a property that you sell within 12 months, the any gain you make on that property will no longer be considered a capital gain, but instead would be considered as business income. Okay, so that's a new rule that the government is enacting for 2023 and on. So Tasso would fall under this the moment he would grab possession of it and then sell the property right away. But in this case, yeah, Tasso, I would say the CRA would trigger it. But I would use what you're saying is claiming there to indicate to them this is an exceptional case. In this case, unfortunately, it doesn't fall into an exception the government has prescribed. Uh, yeah, you might get a fight in your hands, but I wouldn't personally. I don't think it's fair to you in this situation that you would be subject to it. I would fight this in this case, and I wouldn't declare it. I would declare it as a capital gain, quite frankly.
Okay. Next question is from Wes. Does the CRA have all my T slips?
Hmm.
T3, T5, etc., which can be
Hmm.
downloaded from my CRA account into UFile. What
Yeah.
if I receive a T slip in the mail which is not found on the CRA system? I suppose I can manually enter the T slip in UFile, but
Mm.
why doesn't the CRA have the slip?
It all depends on the emitter. I mean, remember that the CRA is dependent on the emitters of the slips, the ones that are creating the slips. If they haven't created that particular slip, there's no way that the CRA, or if they haven't submitted that slip to the CRA and you got it instead, there's no way for the CRA to know. What I would do is I would declare everything that you have. Okay, so if you have that slip and the CRA doesn't, declare it. Okay, declare it so that way, because remember that sometimes if there's a delay also in the system from the CRA. If the emitter is late filing the slip, then the government's not going to have it in their system. So they might be late. There might be a delay there, but you should do the right thing, which is to declare the slip directly on your return.
Okay, next question from Catherine. Can my representative apply for the dental benefit and or the one-time top-up housing benefit?
My understanding is no, Catherine. That this cannot be done through a representative. You would have to create a My Account portal with a CRA, okay, and file for this yourself. That's my understanding. From what I've understood, from what I've seen, your representative would not be able to do this to represent a client. The individual, has to do it directly yourselves through the My Account portal of the CRA. That's what I would do.
Okay, next question from Anna.
Hmm.
Box 30, box 30 and box V, housing and lodging. On
Yes.
Releve 1, it is box V, but on the T4, it's box 40. In UFile, I have entered it where it shows box 30, box V. Is that okay?
Yeah, I would leave it there. Yeah, I don't know why your employer put it in box 40 when it's box V because it should be box 30. So I would leave it in box 30. But just remember that the amount is already accounted for in your box 14. So whether you choose 40 or 30 doesn't really matter. At the end, the net result would be the same. But I would use box 30. That's what I would do.
Next question from Brett.
Hmm.
Can you do a T7 7462E in e-file?
No, I think what he means is the T746, which is an RSP form. Let me have a look to see. I don't believe we support it in UFile. Yeah, no, we don't support it, unfortunately, in UFile. It's not a form, but you can use a fillable form on the CRA site to compute the amount. But unfortunately, we don't have it in UFile. It's not a form that's there.
Okay, next question from Ralph.
Hmm.
As I have reached the 20 limit to file on NetFile for 2020, how can I file one more return that I have to do? I would direct you to the support team
Yeah.
uh, for that. So it's help at ufile.ca and follow the instructions of the automated email. Okay. Um, they can probably help you with that. Cheryl,
Hmm.
I sold my house and my question is on Form T 2091 designation of a property as a principal
Hmm.
residence. When entering the proceeds of disposition, I am entering what I sold the house for or what I sold it for minus commissions and legal fees.
Well, the program gives you the option of entering the commissions and legal fees separately in the expenses line. So when you're entering the capital gain, it's asking you what is your disposition amount, what is your original cost or ACB, and then it's giving you a line for expenses. So you can distinguish between the two. Okay, so at that point, you can simply enter your expenses directly on that line. Now, if you don't want to do that, then your legal fees and your commissions are actually added to your cost. They're not deducted from your disposition. Okay, so if you want to put it directly in one of those two amounts, you add it to your cost. If not, because that's what the program will do when you added it in the expenses line.
Okay, Avi,
Mhm.
hi. If someone is departing Canada for US, what would be the advice? How to go about it? How to go about it? Should one be closing the bank accounts, checking and savings, or just changing mailing address? Is that okay? How about TFSAs? Can this be done at any other time before filing the return next year, or does it need to be done immediately after moving?
Okay, so Avi, you don't have to right away. To be honest, you don't have to close all these things right away. In this case, you would have to do a deemed disposition of certain properties, and you would have to list some of these properties on a specific form called the T1161. So any bank accounts that they have, any cash that is left over in Canada, they would have to declare them on the T1161, but there's no taxable event there. Now, if they have, for example, shares in a taxable account, then you would be subject to the deemed disposition rules, where you would have to, quote unquote, do a paper transaction where you sell the shares at the fair market value of the date of departure from the country, and then at that point you could defer the taxation of those deemed dispositions to a specific form, which is the T1244. Okay, which both forms are supported in UFile, I believe. Both these forms, I believe they're supported in UFile, but there's no need to do it right away. If it's just a cash account, for example, in this case, and a TFSA, these would not be subject to any deemed disposition rules. But you would have to, and the TFSA would not be declared on a T1161, but you would have to declare the account on a T1161. But I think even that one, it has to be at least $25,000. So if it's not there, then you don't have to. There's no urgency to do it. You could do it later on. It's not a problem in that case.
Next question for Ursham. What happens if I choose option let max back decide for my tuition amount instead of carry forward?
Ursham, what's going to happen is if the person is dependent in the file, if you let MaxBack decide, the program will grab the excess tuition amount and transfer it to a parent. That's what it's going to do offhand. Okay. If you let MaxBack decide. Okay. Now, if the person is a family head on its own, so if a student is filing their own return and they're not a dependent with any parent, then by saying let MaxBack decide, the program will simply carry it forward to a future year. So it depends on the situation.
Sorry. Okay. Yes, Lisa, you are at the right place to ask your question. Sorry
Hmm.
about that. Marcella, I need to send the printed tax returns to the CRA, but the assembly instructions are not clear enough. Could you tell me which pages should be printed and sent to the CRA by mail? Uh, it
It is
is
the
the
first
first
file.
file.
Okay, so Marcella, in this case, what you would do is you would need to print what's called the not the King summary. What's it called again? Just give me a second. I don't remember what the forms are called. Just give me 1 second. It would so the pages that have to be submitted to the CRA are is what's called the T1 federal condensed. So you would produce the condensed, then you would produce any schedules or any additional forms, you would include them, and then between basically on the condensed forms, I'm just looking at them now. Um, at the page 3 of the condensed form, you would attach your slips, your federal copy slips directly to page 3 on top of page 3 of the condensed. So you would print off the condensed, attach attach in this case at the page 3 of that condensed form. It's even going to tell you to attach the slips and other schedules. So you have pages 1 and 2. Then you have a page called the T1KFS. On top of that page T1KFS, you're going to put all your slips and all any other schedules and forms that the program is producing for you. Then you would add page 4, attach all them together, mail them to the CRA. That's how you would do it.
Okay, next question is from Steve.
Mhm.
Using UFile, how would I input end of employment effective May 31st, 2022, i.e., are only the expenses, work, and total mileage to May 31st input, and how is the CCA handled? Does UFile adjust for 5 months out of the 12?
No, I mean the adjustment would not be done automatically. You would have to indicate the expenses that are purely related to those 5 months. In this case, but now with the CCA, remember though that with the mileage, it should be done automatically with the mileage actually. So what you would do is, for example, you would indicate the business mileage that you had for those 5 months, divide, and then you would enter the mileage for the full year, and the program at that point will do that proration based on the 5 months in that case. That's how you would do it. That's how you would handle it.
Okay, seeing that we have about 15 minutes left, I would ask people to stop writing in questions. We will try to go through everything that's already in the queue, all right? So our next one is from PM. I bought
Hmm.
a condo in 2019 but could not rent it out until 2021. It
Yeah.
was vacant during this period. How do I claim the condo expenses, condo fees, insurance, property tax, etc. during this period when there was no rental income? Can I claim the past expenses against current and future rental income? If yes, how do I claim it?
Okay, Peter, in this case, you can't. You would have to assign them to the years that the expenses were incurred. You can't simply choose to grab the expenses for the first 2 years and then use them in the year that there is income. What you could do, though, is that you could create rental losses for 19 and 20, even though they were not rented, because as long as your intention in those years was to rent the property, if you had no intent to rent the property, then you can't deduct those expenses. The overarching rule, or what's called the general limitation when it comes to deductible expenses, whether it is for property income, rental income, in other words, or business income, is that they were incurred for the purpose of producing income in the year. Now, if you had no intention of renting those properties in those years, you can't deduct those expenses. But if your intention was to rent out the property, but for XYZ reasons, you couldn't in those years, then you could deduct your expenses in those specific years. You are allowed to do so, and you're going to create rental losses in those years. That's essentially what you would have to do. So then you would have to essentially adjust your previous year's returns.
Okay, next question from Moo.
Mhm.
I am doing my taxes as sole proprietorship since I
Mm.
own my small business. Can I report the HST with my tax filing in UFile for Windows? And how can I do that? Which part of this software contains that option?
Okay, so yeah, if you've made remittances for your HST, then what you would do in that case would be in the business section, you should have an option there for any remittances that you made for the HST. So your income that you're declaring is going to be the income including your HST that you collected, and then below that gross income line, there's going to be an option there, or a line there to indicate the amount that you remitted for the HST, and at that point, simply claim that amount in to deduct the amount from your gross income.
Okay, next question is from Doug. Our daughter had a SERB overpayment she returned last year. She was told to claim it under the line 23 210, even though the program says to do it under 23 200. How do we do this?
23 to 10. I never heard of that line number. Um, Let me just check. I'm just looking at the federal return now. 23. Okay. Okay. Yeah. Yeah. There is a specific line number. Okay. So for that one, Doug, your best bet would be to go into a T4E slip, and you're going to have a line there for SERB repayments. Okay. So that's where you would indicate the repayments. That's your best bet, is to go into a T4E slip, which ordinarily it would have been the slip that you would have gotten for the income in that case. And there's two line numbers there that indicate any EI repayments in this case, and then you would specify. So it would be line 30, essentially box 30 of the T4E. So add a T4E slip, and then there's two box 30s. One you would indicate the amount. One you would indicate the amount of. The general repayment, and then you would indicate again whether the repayment was related to SERB, and that should get you the correct line number.
Okay, a question from Brett. Can I use UFile to entries the T746, which
Mm.
is a withdrawal of over contribution from RSP? Did you
Yeah, we
answer that
did
one?
that one. Yeah, we did that one.
Okay.
Yeah, we did that one.
Next question is Bruce McKay.
Hmm.
When one spouse is in long-term care, I add a section under Ontario tax credit for a separate residence, and under application for tax credits, I select yes under involuntary separation for to do what separation for do you want to apply individually?
Yeah.
One, does the above need to be applied both spouses return? Two, does each of them get a trillion benefit on their return, or is it all paid to the head of the household?
Okay, so if yeah, the answer to one is yes. I believe you do have to indicate it in both files. Number two, the answer is yes again. If you have an involuntary separation, you are allowed to split the trillion benefit amongst the couple. That's why the program is asking you that question, is to perform that split. So the answer is yes.
Okay, next question is from Yilin.
Hmm.
My kids are child actors. Can they claim lesson fees such as tennis, skating, swimming, etc. as self-employment expenses as they take those lessons for acting needs?
Yes. Listen, if you're declaring the business income in this case, then yes, those expenses would be related to their business income, right? To their self-employment income. So the answer would be yes. Yeah. As long as, again, as long as these lessons were taken to produce the income that they're collecting as actors, which I think the case can be made very easily in this case.
Okay, our next question is from Maria.
Hmm.
My son could claim tuition and my husband also from the same tuition if the amount is more than 5,000. And
Hmm.
if we have two sons, each one can transfer to my husband uh, $5,000. So that means 5,000 for one and 5,000 for the other.
Yes,
Is
I
that
believe so.
correct?
The limit, if memory serves me, the limit is 5,000 per child in this case. So yeah, I believe you would be able to claim the $10,000 in this case.
Okay, David. My daughter worked as a massage therapist last year in a clinic under contract.
Mhm.
Part of her earnings were deducted, 40% rent plus GST. Can this be
Yep.
deducted as an expense as well as her supplies? Also,
Mhm.
does she require GST number? Her gross income was under 30,000.
Okay, so David, yes, I mean, I'm assuming she's self-employed in this case. So yes, the rent would be deductible, absolutely, because it is a cost of doing business for her. It was a cost of her being able to make income in this case. So the answer is yes. Does she need to collect? Does she require a GST number? The answer is no. The key is that within a four quarter period, essentially. So this could be a calendar year or a floating year, or within one quarter, she would have to collect over $30,000 gross income, right? So if she never reached that amount, then no, she's not required to become a GST registrant in that case.
Uh, Yelin's next question was for stay-home income, is it taxable?
For stay-at-home income, for homestay income, I'm not quite sure I understand the question, Yellen.
Okay, let's go to Ma.
Yeah.
How do you determine the forex rate for the TL111A? TL11A, sorry.
The forex rate. Okay. Well, basically, you go to the Bank of Canada website. Okay, just look up Bank of Canada exchange rates. You could Google
Mhm.
that simply, and then when you go, and then Google should send you to the main site. You choose the yearly rates in this case. You choose the yearly averages, and then you look at the Australian dollar. I believe it's dollars there, if memory serves me. You look at the exchange rate of the Australian dollars. You convert based on that. That's what you would do.
Okay, next question from Anne.
Hmm.
Air quality improvement tax credit
Yes.
question.
New
I
credit.
found
Yeah.
that there is a new tax credit this year,
Hmm.
air quality improvement tax credit. I got a new true HEPA purifier for my office, approximately $550 plus tax from
Yeah.
Costco. I am
Yeah.
self-employed and I have my office. Is it a legit to apply that to apply that credit for that credit?
And it depends on where you're using it. Is the building what the government calls a qualifying building, meaning that it has to be a purely commercial building? Okay, so if the building that you used this HEPA purifier for is in this case a commercial building, so it's not your home, for example, where you have your home office, then the answer is yes. But if it's for your home office in this case, so in other words, the you have an area of your home dedicated for your office, but it's also your personal home, then the answer is no. It all depends on that. The government's very clear on that. It has to be what's called a qualifying location, meaning it's got to be a purely commercial building. If that's the case, then the answer is yes. If not, the answer is no.
Okay, next question is from George. I
Hmm.
made an error for my medical expenses. Can I correct this on my return?
Yes, but again, my account with the CRA. It's the quickest way of doing it. You simply create the account with my account with the CRA, and then there's an option in my account for adjusting your return. It's going to give you the columns of what you claimed previously, and then it's going to give you a column for what you want to claim as an adjustment. Simply plug in the amount, make your change.
Do they need to wait, if they already filed, they need to wait for a notice of assessment to come out
Yes,
before making a
yes,
change?
yes, absolutely. Yeah, it's the only time the government's even going to make it available. They won't make the adjustment available until they've assessed the return.
Okay. Next question is from Belinda. Is the new federal vacant home tax forms incorporated into UFile for 2022 reporting?
The answer is no. You're talking about the UHT 2900, which is the underused housing tax. That's what you were talking. I'm assuming, Belinda, that's what you're mentioning here. The answer is no. We don't support it in UFile. You would have to go to the CRA site directly and simply look up the form, which is the UHT 2900. That's the form that you have to file. And by the way, actually, the government announced today that there's an extension of the deadline. By the way, so you could file now up until October 31st instead of May 1st. So the government just made the announcement. Actually, it was either this week or last week they made that announcement.
Okay, next question from Lisa. My son just received a T4A with only box 48 filled in.
Mm.
UFile also says I need to complete a T2125. Does it matter if it's under business or professional? He was an extra in a film, TG production, and does
Hmm.
he end? Whoops, sorry.
Yep.
And does he end to complete the expenses part? He
Yeah.
seems he
Seems
gets
to
more
get
of a
more
refund without
refund
it.
without it. Yeah, well, of course, it's going to get more of a refund without it because it's taxable income, right? So in this case, Liza, in this case, it would be a professional. That's what you would choose. It's just logic. Is this a business that's selling products, or is this a professional that's selling their services? Your son being an actor is a professional selling their services, right? So that would be a professional in this case. That's what you would choose. But they can deduct expenses. If you had any expenses that was related to that income, then you could deduct those expenses under the professional income. You're absolutely allowed to do that.
Okay, Pat, he had submitted before regarding a disability tax credit for his elderly parents. He said he should have mentioned that they were both living in separate care homes and their income is
Ah,
mostly likely over the threshold. Does
threshold.
this make a
Okay.
difference? Is this where I can claim the 49.9% of their total nursing home
No.
expenses? Are their
Mm.
nursing home expenses the same as the Canada caregiver
Okay, so
amount?
then the caregiver amount we can forget that because they're in a nursing home, they're being taken care of there. So the caregiver amount you're not eligible offhand, so that you cannot. Disability tax credit, the transfer again. Ordinarily, you would have to be living with the person. So to me, again, you would not be able to claim them. So you can't put them as dependents in this case. To me, as far as that end, I should have mentioned that they are both living in separate care homes and their income is most likely over the threshold. So they're going to claim the full disability tax credits. There's really nothing for you to worry about there, Pat.
Okay.
Yeah, Tino. First of
Nanye?
all, let me just say
Okay.
thank you to Tino who posted the Bank of Canada rates. That's awesome. Thank you, Tino. Exactly right. Yeah, thank you very much.
Okay, Nanye,
Mhm.
can corporation receive tax refund payouts or are they only eligible for non-refundable tax credits?
Can corporations receive tax refund? No, I mean tax refunds are applicable for corporations as well. There's no non-refundable tax credits, by the way, on the corporate side. That does It's not a concept that exists. There's credits, but there's no. Yeah, I mean no, there could be. We just don't call them non-refundable tax credits. But in the end, no, there can be a refund. You can have a refund on the corporate side. Absolutely, that is possible.
Next question from Will.
Mhm.
We own some condos and begin to look at selling them. What sort of tax protection is available on disposal of real estate investment properties?
I don't know about tax protection. I mean, there would be. Um, and are beginning to looking at selling them. Well, I mean, they're likely going to be a capital gain unless you own them for less than 12 months, and then they become business income. And if you start doing this on a regular basis, it's usually going to be considered business income, not even a capital gain, because the government will consider that you have a business because you're essentially flipping houses to the government. So at that point, you essentially have a business. So there's not now as far as protections, if you're considered a business for selling these properties on a regular basis, then you can deduct expenses related to the sale of those businesses, including your renovation costs, okay, for the condos to bring them up to speed in order to sell them. So that would be some things that you can claim.
Okay, King, how is
Mhm.
the download to UFile works? Do you have an example on how this works?
Yes, on our YouTube page. You simply go to you look up UFile on YouTube, on our YouTube page, and we have a video that shows you exactly how AFR works, step by step, what to do, and the procedure to do to be able to use AFR. So go to our YouTube page directly and go ahead and view how it's done, and the YouTube video is going to explain it to you.
Question from Steve. I have heard of a new form UNT 2900E
Yeah.
required by the federal government for rental properties.
Mm,
Are all rental property owners required to complete this by April 30th, including
yeah.
those that are Canadian citizen residents?
Mhm.
Is this form now part of the UFile program?
So I answered this partially with another question earlier. The answer is no, we don't support the form. It's the UHT, not UNT, but UHT 2900, which is the underused housing tax. The underused housing tax targets essentially non residents who own property in Canada, okay, and who are, as per what the federal government considers, as underusing the property, okay, meaning that either somebody's not living in it for at least 6 months out of the year, and then there's some other exceptions that go along, which would take me an entire hour to teach all of you what it would be. It's quite convoluted as far as how the government works it. Now, residents of Canada and citizens of Canada are not subject to the UHT. Not only are they not subject to the UHT, but also they're not required to file the UHT 2900. Okay, they're not required to file that form. Now, if you're a non-resident and you own property in Canada, okay, and for example, you're not renting that property or you're not using it yourself for at least 6 months out of the year, then you would be subject to the UHT tax, the underused housing tax, which is 1% of the assessed value of the property, and is an annual tax. Now, if you're a non-resident and you're renting the property, then you're not subject to the tax. However, you are subject to filing the UHT 2900 annually and declare your exemption, okay, to the tax. So that you are required to do, okay? But anybody who's a Canadian citizen or Canadian resident is not subject to the tax, number one, or filing the tax, number two. And we lost Ida there. So we're just going to answer a few more questions because we're already past the time. Let's go into here. Oh, there she is. And we're going to bring her right back. So Ida, let's do about one more question because we're already well past the our time because we're
Okay.
we're doing 1 hour, and then we'll answer your questions directly in the chat. Okay, so anybody who we have not answered, we're going to go into the chat and answer your questions. Okay,
Okay,
so
George, box 135 on my T4A shows an amount which relates to PSHCP. Does this amount also included in my dental premium plan?
good question. I don't remember what the T4A box 135 is. Let me just have a look at it. So it would be 135. Oh, I don't even see it. What is that? Hold on. T4A. Okay, just 1 second, everybody. I'm just going to look at the slip, and because 135 doesn't tell me anything. Then why am I not finding that box? Could it be
Usually it's a
T4
box.
maybe? Oh no, it's not there. I'm even looking at the slip.
Isn't that one you manually that they enter manually or something?
Let me have a look because I'm not finding it on the T4A. Let me see if there's a box 135 in the. No, there's none in the T4. 131. Hold on. Control F. 135. Give me 2 seconds. Where is it? Oh, 135. That's the line number on the return. Okay, so hold on.
No, he says box 135 on my T4A.
Yeah, but it's not. It's actually the T4A is referring to 13500 as business income. That's what it's referring to, which is business income actually. It's hold on. 135. Yeah, I'm not finding it. Okay, we'll come back to it. Oh, okay, no, there it is. Okay, I found it. All right, yeah, yeah. So that's medical. Yeah, that's the amount of medical that you paid, essentially. Okay, these are the premiums on the insurance that you paid, which are deductible. They're deductible as a medical expense. Well, not deductible. You could claim them as a credit for your medical expenses. They're an eligible medical expense.
Okay, you
Okay,
want to do one
so
more?
Let's do one more, and then we'll close up because yeah, and then we'll come back and answer some of the questions.
Okay, Viv, my husband is a permanent resident and this is our first income tax report. All his
Yeah.
income is foreign and no Canadian income. I have more income than him. Should I split it my income with him to lower my taxable income? And they are both in Quebec.
The answer is it depends, Viv. What type of income are we talking about? If it's pension income, then the answer is yes, you're allowed to do that up to 50% of the eligible pension income, but no other income you're allowed to do that, with the exception of maybe dividend income, where you can increase your spousal amount credit claim, but otherwise, you can't do it. It's only pension income that is splittable or allowable to be split. No other income is allowed.
Okay, that covers today's Facebook Live session. I'd like to thank Jane Sorensen. She's answering some of you directly, I've noticed. So thank you
Thank
very
you,
much.
Jane.
It's a great
Thank you, Jane.
help, Jane. Um, the video will be available on our YouTube page as well as on Facebook.
Mhm.
Sorry, there's just too many questions that are coming in, and we do have other appointments ourselves here at work. So, thank you very much, Gerry. Any words of wisdom before we sign off?
Just be aware that on our Facebook page, we always post a lot of things that we post on our social media. So we have a podcast. Remember that. So if you go to Apple, what's called Apple Music, or if you're in Google Podcasts, we have a podcast that we post regularly where we talk about a lot of interesting tax topics. We do also produce a lot of videos for our YouTube page as well. Okay.
Our podcast is also on Amazon Music.
Yes, it's also on Amazon Music as well. Yeah. So we also have a lot of content on our YouTube page where we answer a lot of questions. Like for example, some of the questions that I got today, had you got they are answered on our YouTube page on some of our how-to videos as well. Like for example, foreign investment income that I answered, we literally just posted something today on how to enter investment income in UFile. So we also have what's called we also our podcast is also posted on our YouTube page as well, and we also have some educational videos, which unfortunately we have a couple of them last year. Unfortunately, we haven't posted any so far this year, but we will be posting very soon some nice educational videos on taxation as well. We also have our blog on ufile.ca. Go to the tips and tricks tab on ufile.ca, and we post regularly blog articles that are related to taxes, including our most popular one, of course, which is the tax update one, where we indicate to all of you what are the changes that are coming to the tax return. So make sure you read all that. We give you all this information free, including the questions that I answer that we answer for all of you right now. We give it to you free. It is a service that we'd like to provide for you because we love you, the clients. So that's why we do it. So don't hesitate to use all of our social media pages to get all that information.
And thank you very much. Whoever we haven't had a chance to answer, Gerry will filter through the questions and reply to you or provide you the link to the video if to find the information. Always, if you are unable to, if you need help, our support team is there to help you. It's help@ufile.ca, and follow the instructions on the automated video. If you don't hear an answer between 24 to 48 hours, just come back on our Facebook page in Messenger, provide me with your request number, email address, and I'll follow up for you. So thank you very much. This concludes our Facebook Live for today, and see you next time. Thank
Thank you,
you.
everybody. Bye
Bye
bye.
bye.